Hey everybody, I am going to talk about my five largest stock positions in my portfolio that collectively make up over 30% of my investments. Before I do, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now for my sponsor, The Motley Fool. It's the best way to support this work I'm doing on YouTube, so please check it out. Again, fool.com/Frankel. All right, so every so often, I do a quick portfolio checkup just to see how much I've invested in what, how much some of my investments have gone up or gone down or whatever, what I'm most invested in now. And that's really kind of what surprised me with this latest round. Pretty much my larger investments have mostly done well. So now my top five, I usually don't have a very top heavy portfolio. I'm pretty diversified. I generally don't invest more than 5% of my money in any one stock. But now my top five have become over 30% of my portfolio. And I really like all five of these stocks still. I'm not going to sell any of them just because they went up. So let me share my screen. All right. So these are not in order, by the way. So this isn't necessarily my number one, but one of my top five is Berkshire Hathaway. It shouldn't come as a surprise to most people. I've been investing in Berkshire for well over 10 years, kind of building a position over time. And it's really not hard to see why this is a great kind of core investment for any portfolio. It's a pretty well known company, massive conglomerate led by Warren Buffett. There are a few reasons I like this so much. One, it is such a diverse collection of businesses. They have over 60 subsidiary companies, ranging from household names like Geico, Duracell, to lesser known names, some consumer products, Dairy Queen's a Berkshire subsidiary, a bunch of energy businesses, some other insurance companies. There's a lot in there, and a lot of them are designed to do well no matter what the economy is doing. Like think of Geico. People have to pay their car insurance no matter what the economy is doing. So very resilient collection of businesses, very diverse. It's even more diverse because they have that $380 billion stock portfolio that makes up about 40% of the company's market cap. A lot of those stocks were handpicked by Warren Buffett himself. Big positions in companies like Apple, Bank of America, American Express. I've said before that if I can only own one stock, it would be Berkshire Hathaway. And it's because it's like owning a lot of different businesses in one investment. And another reason I love it so much is because of that large cash position it has. Berkshire has almost $190 billion of cash on its balance sheet. Um, right now, it's earning about 5% interest in short-term treasuries. So it is a multi-billion-dollar source of income for this company. But it also gives it financial flexibility. Let's say the stock market crashes later this year. That gives Berkshire $190 billion to put to work and really take advantage of bargains in the market. And good times, it can just leave it there to collect interest on its balance sheet, take advantage of opportunities if they come up, but it's not a big hurry. So, really great business, great track record. It's not going to deliver the returns that it has in the past, but I'm totally confident it's going to slightly beat the market over time and with pretty low volatility. So um, I'm gonna hold on to that one and probably keep growing my position over time. Number two is a company called Realty Income. A lot of people know me as a big fan of real estate investment trusts or REITs. Realty Income was the first one I ever bought, and I've been building that position for a while, just like Berkshire. If you're not familiar, they are a real estate investment trust. They focus on single tenant retail properties. They have some office properties. They have a gaming property. The Wynn Resort in Boston is a Realty Income property, but about 80% of their rental income comes from single tenant retail. Now, don't be worried when I say retail. These are things that are very recession resistant, very resistant to e-commerce. Think of drugstores, like CVS is a big Realty Income tenant. Think of dollar stores, warehouse clubs, grocery stores are a big component of Realty Income. So very essential properties that should be just fine over time. Now, the company has a very long track record. It's been in business since the late 1960s. It has been a public company since 1994. over those 30 years as a public company, it has handily beaten the S&P 500 like several times over that long period of time. I think about a 13% annualized return versus about 10% for the S&P. It's a great income stock. It has a 6% dividend yield. It has raised that dividend for 107 quarters in a row. Fantastic track record. No dividend cuts, not even during the financial crisis, which was real estate based, or the COVID crash. Kept paying its dividend, should keep paying its dividend for years and years and years to come. And it has paid more than 600 consecutive monthly dividends dating back to way before it was even a public company. Again, it is a monthly dividend payer. It actually is the trademark on the phrase the monthly dividend company. So really interesting business. Another one I am a big fan of that is in my top five, and I'd have to say this is probably the most controversial of my top five, is General Motors. A lot of people don't understand why I like it so much. It is the only EV stock I own, the only EV stock I want to own. It is, everyone knows that it's the leading US based automaker. Um, a lot of people kind of still harp on the fact that it went bankrupt in the wake of the financial crisis. Totally different business today. It is massively profitable. It trades at a very cheap valuation of about 6 times trailing earnings. The EV potential is just enormous. The it's only rolled out a few kind of real big EV models so far, but the reception has been pretty good. Um, I think it has some big advantages in terms of, one, brand recognition. For example, if you have a friend who drives a Silverado, they wouldn't drive an F-150 if it was half price. Very, very loyal customer base. Some other advantages, they have their own battery technology, which is a big advantage over a lot of other EV tech manufacturers. There's a lot of potential in autonomous vehicles. We know that Cruise, which is majority owned by GM, has had its hiccups in the past year or two. Still a lot of long-term potential there. They're making really good progress of righting the ship. There's a lot of potential in a lot of different areas for GM. Military applications of EVs is a big potential area for GM. Delivery vehicles is a big area of growth for GM. And management really prioritizes capital return through dividends and especially buybacks. They have a massive buyback program right now. I just think it's a very, very deeply discounted stock, even after a recent rally. And it's one that I value very, very highly in my portfolio. Number 4 is a company called Marcato Libre. The ticker symbol is MELI. They're an e-commerce and fintech platform that is based in Latin America. They're often called the Amazon of Latin America. That doesn't really do it justice. They also have a massive payment processing platform called Mercado Pago. It processes about $160 billion in annualized payment volume, including about a lot of that is outside of the company's e-commerce business. It has its own logistics platform. It's got a credit card business. The company has a lending business. It has a digital storefront platform, kind of like Shopify. It has an investment fund, Mercado Fondo, that is offered to customers of its Mercado Pago platform. It's got a new ad business that's very young. There's a lot of room to grow here. E-commerce and digital payments are not nearly as prevalent in a lot of Mercado Libre's target markets. They specialize in Mexico, Brazil, Argentina, a lot of Latin American markets. Big, big opportunities, a lot of growth in this business. And it's one that I am very, very optimistic about. I think it can be a big winner over the long term. It already has been a very big winner, but it can be even more so in the future. And last but certainly not least, rounding out the top 5 is Pinterest. Ticker symbol is PINS. Now, unlike the other 4 that I mentioned, I never bought Pinterest with the intention of it being one of my largest investments. It was just a case of very, very good timing. I like Pinterest. I love the business, but I bought it at the depths of the COVID crash. I think my cost basis is something around $15 a share. It's currently in the 40s. So it became one of my largest investments very quickly. It's the social media network focused on idea generation. It's got a rapidly growing user base, a lot of potential to monetize, especially outside the US. About 80% of its users are outside the US and are bringing in comparatively very little revenue compared to its US user base. a lot of potential in e-commerce. It's a place Pinterest is a place people go where they find products that they're eventually going to buy. So there's a lot of ways they could potentially kind of incorporate themselves into that purchasing process. A lot of potential there. The new CEO, Bill Reddy, came from Google. He's very great track record, and I already like what he's doing over there. So I'm a big fan of Pinterest. So those are my top five. Let me know what you think. Let me know what your big investments are, and I'd love to hear from you. I'll do my best to respond to everything individually. Thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.